February 1st, 2010. Welcome to Free Trading Videos in the Afternoon Report. Consumer spending rises for a third straight month. Not too bad. We had basic materials showing quite a bit of strength out there also. And today we have the markets across the board up more than 1% on the Dow, S&P, Nasdaq, and Russell's, with a confirming drop in the volatility index dropping to under 23. There is something that you all should know about. There's something called the put-call ratio. It's the measurement of calls to puts in the option side of things. And the higher the number, the more bearish. I'll show this to you. I'm going to bring this over, and this is put-call ratio, and this is going back to June and July. You can see this range. Anything under 1 is bullish, and we'd get little spikes above ones for, but the actual about 0.8 is the good average. 0.8. As of today, we have a monster spike in put activity. Right here at 2.2 is where we ended the day, gang. The question is, when we start breaking down, why didn't we see a bigger reading here? A lot of that had to do with hedging, I believe. And now that people are starting to not hedge so much, but now starting to lean towards the put side of things, or the bearish side, is why we're getting a spike like this. A lot of people say that the options is smart money. I would venture to say that futures is the smarter money, and the smartest money being Forex out there trading in the markets. But let's look at technicals. That's what we're here for. We're finding some nice support right here at 1075, and today we rallied strong, giving us what appears to be a bullish type engulfing pattern, and closing near the day's high, very strong, and the banks did fairly well given that support. However, throughout the day, the banks didn't fare as well as a lot of the other sectors overall. But this formation, gang, looks pretty bullish to me. I expect to have a bullish day tomorrow, barring any negative news across or overseas, or any economic news that might be coming out. But I think here we will be having some resistance here at this 1090. Yeah, the 1090 to 1095 is going to be a resistance area. But man, if we could blast through that, if we can get over 1100, if we could blast over, get over 1100, that would be pretty nice. I'm hedged right now. I was bears coming down. I picked up some longs today to better hedge myself, just in case we do pop up. And I have stop losses on my bears positions and also my long positions, because anything can happen here. And so I'm just waiting on that to show me some activity on what I may want to be doing here in the markets. Let's also look at the Nasdaq. The Nasdaq has given us what's called a bullish Harami pattern, but we still have the 100-day moving average acting as resistance. If we do pop, we're at 2200 is going to be the next logical resistance area. And on the MACD here, we do have a positive tick using the 5, 9, and 2. So that means we do have a crossover taking place. So we do have a good chance of some run here. So that should be interesting. I'm still a little concerned about that put-call ratio. I want to keep a very close eye on that and see how things pan out. So happy trading and safe trading to each and every one of you.